because I do think we could have new record highs in the price of gold by Friday. We did get a new record high in the price of gold today, just barely. I think we touched 3,700, but it was a roller coaster ride. Silver was down almost $2. Like, there was a big sell-off. Silver almost got to 43 yesterday. And before the open, there was just, I think they really rushed a lot of the stops, and they had a big drop in silver, almost $2. And a gold was down like 30 bucks, 40 bucks. But then it was up like 30 bucks after the news came out. So it went on a roller coaster ride, but it only closed down about, I don't know, $20, $30. So gold's around 36.60. I mean, not too far below the record high.
Gold is going parabolic, and Peter Schiff says we haven't seen anything yet. Earlier today, gold touched nearly $3,700 an ounce, setting a brand new record before pulling back slightly. Silver spiked near $43, then got slammed almost $2 lower, only to rebound again. Schiff says this isn't noise. It's the market shaking out weak hands before the next leg up. In his words, we've got a good shot at $4,000 gold and $50 silver by year end. This is not just a rally. It's a full-blown monetary warning shot. The Fed is cutting into rising inflation, Trump is firing top economic officials, and the yield curve is screaming that real rates are about to go even lower. Schiff believes this is the perfect setup for gold, silver, and mining stocks to go vertical.
There were quite a few gold stocks, that closed positive on the day. They were down quite a bit yesterday, even though there was just a small move down. But, I think that this rate cut and the fact that we're getting two more at a minimum between now and the end of the year, that I think ensures smooth sailing for new record highs. I still think we have a good shot at hitting $4,000 gold by the end of the year and $50 silver. So right now you still got quite a bit of upside in both, especially silver is now back below 42. So you got about a 20% gain between here and $50. That's not bad. Now, of course, I don't think silver is going to stop at $50. I think it's going much higher, but it may not get much higher this year. So I think by the end of the year, that's a realistic target for silver. So I would buy it now, shiftgold.com, right? We don't just sell gold. We sell gold and silver. But the mining stock charts look even better to me. The GDXJ hit a new, I think, record high. It finally took out its high from 2011. But the GDX, which has been acting stronger of late, still needs to rise about 60% from here, I think, to get back to its 2011 high. But based on the chart, it looks like it's going to go there very quickly. So I would be buying these stocks as quickly as I can. My favorite way to participate is my own gold fund, the Euro Pacific Gold Fund. EPGIX is the no-load symbol. You could pick that up anywhere. And I'm not just saying you should buy gold stocks or my fund because I make some money. Of course, I don't make any money if you just buy gold stocks at some random discount broker. But I'm happy regardless. But I think our fund has a lot to offer, and I think we're going to outperform over the long term. But the real reason I want my audience to buy them is because I think you're going to make a lot of money if you do. It's not that there's no downside risk. There is, but I think it's minimal when you compare it to the upside potential, which I think is enormous. And unlike the Fed, I have a lot of confidence in my forecast. I'm very sure that I'm right. I don't guarantee that I'm right, but I think I am. The Fed has no clue, right? But my forecast is not just a guess. Right? It's based on my understanding of monetary and fiscal policy that apparently is lacking at the Fed. Someone says, wow, you must be rich. And then the mother says, no, he's just kidding. Nobody has two TVs. And the reason nobody had two TVs was because they were so expensive.
Today's action was wild. Gold plunged $30 to $40 in pre-market trading as stops were hit, then roared back after economic headlines, closing just under record highs near $3,660. Silver saw the same whiplash, falling nearly $2, but staying above $40. Schiff says this volatility is bullish. Big players are trying to shake you out before prices rip higher. Current events are stacking in gold's favor. President Trump just fired the head of the Bureau of Labor Statistics and moved to remove Fed Governor Lisa Cook. A political earthquake that has traders betting rates will stay artificially low for longer. Meanwhile, fresh labor data shows the U.S. economy is slowing, and the 2 to 30-year yield curve is steepening sharply. Historically, a signal that rate cuts are imminent and inflation will stay elevated. Schiff warns, cutting rates now could go down as the Fed's biggest policy mistake yet, worse than the ones that caused the 2008 crisis. He sees this as rocket fuel for metals, gold heading for $4,000 to $4,200 by mid-2026, and silver breaking through $50 with room to run. UBS agrees, having just raised its silver forecast to $44 by end 2025 and $47 by mid-2026. ETF inflows back this up. More than 20 million ounces have been added this quarter alone. Schiff is also sounding the alarm on the dollar. The dollar is on a one-way ticket down. You don't want to go down with that ship. Get into non-USD assets now. He's urging investors to buy gold and silver mining stocks, noting that the GDXJ just broke its 2011 high and expects GDX could rally another 60% to catch up. His playbook: own physical metal, accumulate miners, add energy and commodity-linked equities, and rotate into international and emerging markets while they're still cheap.
A bit of an up move in interest rates on the long end. The 30-year closed a little higher on the day, and that's been my forecast. The 10-year is 4.09. A couple of days ago, it was down to like 402, 403. I think we're headed higher from here. Right? I don't think the long end of the bond market is going to react positively to the Fed cutting interest rates when inflation is not only well above 2%, but headed in the opposite direction. The stock market, again, hit record highs. I think the Dow Jones hit a record high today, and it closed in record territory above 46,000. Dow was up 260 points today. The NASDAQ was actually a little bit lower on the day, as was the S&P. Neither hit record highs. It was just the Dow. Russell 2000, not a record high, but also up on the day. But overall, the stock market likes the news that the Fed is cutting interest rates. But I can assure everybody that this is a major policy mistake. This is going to go down, I think, maybe as the biggest mistake. And that's saying a lot because they've made so many big mistakes, like the ones that led to the 2008 financial crisis, inflating that housing bubble, and the mistakes over COVID that led to the transient inflation that wasn't transient. So they've made a lot of mistakes cutting rates, and this could be the worst one because inflation is headed much, much higher, and they've already put themselves on a preset course to cut rates, and they're not going to change from this course because they know what it might mean to the market. So they're going to have to rationalize all the upticks in inflation and attribute it to the one-off effects of tariffs. They probably don't want to say transitory, so I guess they'll come up with another word that means transitory, like with abundant and ample, maybe, not transitory, what transient or temporary, I don't know, whatever. They'll come up with a synonym that means the same thing, but doesn't quite subject them to the same degree of ridicule. But you got to look through all that, and you got to load up on inflation hedges. All your investments, I think, should be non-U.S. dollar. The dollar's got a one-way ticket down. You don't want to go down with that ship. You want to abandon ship, and you want to buy foreign stocks that continue to eat the lunch of the U.S. stock market year to date, despite the fact that it's hitting nominal record highs. So you want to, all the Euro-Pacific funds, I think, are great. The dividend payer fund, the value fund, the emerging markets, I think, are going to be the stars of 2026. Just my value and dividend payer funds are doing better this year, but I expect a major move up in emerging markets next year and the year after that and the year after that, because I think that the transition is out of U.S. markets into international markets, and then it's going to be from developed to emerging markets, but all of it non-dollar and commodity focused. Energy, I think the energy prices are still low, so energy stocks are still very cheap. Maybe not as cheap as the miners, but they're still cheap. We still have good allocations there. So just brace yourself. The Fed is, waving the checkered flag. We know how this race is going to end. You just got to position yourself. Anyway,
Peter Schiff's message is loud and clear. This is a rare moment to position for what could be the biggest precious metals bull run in decades. He believes the upside potential is enormous, and that the window to act may be closing fast. Do you agree with Schiff? Will gold really smash $4,000 before the year is over? Can silver break $50 and never look back? Or do you expect one last correction first? Share your thoughts in the comments below. I'd love to see where you stand. If you found this breakdown helpful, hit like, subscribe, and turn on notifications so you don't miss the next major move. The Fed may be cutting into an inflation storm, and if Schiff is right, gold and silver holders are about to have their moment.